Well, guys, I gotta be honest with you, there is a compelling case to sell both Palantir and Tesla. With inflation still bad, a recession coming, the Fed still tightening, and basically the market just now kind of coming to grips with that actual reality that all those things are coming, I mean, it actually may make a lot of sense, so let's talk it all the way through, and I just ask in exchange for you to gently tap that like button and, make sure you're subscribed too, so that way the YouTube police doesn't tell on you. Oh, you guys hadn't heard of the YouTube police? I don't know. It's kind of a thing. I don't know. Maybe not. Maybe it's just a rumor. I'm not sure. But just to be safe, make sure you like and subscribe so that way they don't get you. So there's actually 4 main considerations that I take into account before selling any stock. And it's something that I absolutely suggest you guys take a look at too. But they're the main 4 things that I consider anytime I look to sell a stock. The first would be that there's an actual change with my plan with the stock in the first place. And honestly, guys, this is a question you have to answer. But do you have a plan for your stock in the first place? I mean, if you don't, that may be a reason right there to sell because you didn't have a plan in the first place. So maybe you bought based upon hype. You thought the stock was going to the moon and instead it's kind of gone the exact opposite direction or whatever the case is, but you basically didn't have a plan in the first place. Maybe your plan was to sell the stock whenever it hits a predetermined price, and guess what? It's at that price. Now, hopefully that wasn't a low price. Hopefully that was a price up above and you're up on the stock and therefore it's time for you to exit that. And that was part of your plan, so that makes sense to me to exit the stock at that point in time. Or maybe your life situation changed altogether, so you had to change your entire plan altogether for all of your stocks. Then at that stage, if you thought that plan completely through, kind of revised your plan and have a new plan over here that you're going to, then that may make sense to sell, so that way it aligns with your new plan that you have moving forward. But trust me, guys, a new plan has to be laid out completely. What you're going to buy, what the price targets are, how much money you want to put into each, or how many shares you want to buy, or whatever the case is. All those things need to be taken into consideration for that new plan. But if this stock that you currently own is not part of that new plan, then that obviously makes sense for, to sell in that case, or to shave that position smaller. That obviously would make sense to do it at that point in time. And if you don't have your strategy locked down for 2023 right now, it's all right, no worries. I actually have a sale going on for my private group where we have courses to help you through all that. We're actually doing a mini course here next week, kind of in between Christmas and New Year's, to kind of help you get started with that planning and that process of strategizing out your next year, because planning is the biggest way that you get there, guys. So make sure you take advantage of that holiday sales. The pinned comment down there if you guys are interested in that. The second reason, and it's probably the biggest reason for me personally, is was there a fundamental change with the business itself? I mean, did regulation change? So therefore, all of a sudden, what was making them a lot of money before is not going to make them as much money in the future? Did a key management team member leave and therefore, it's caused a ripple effect that's going to affect the stock? Or did you get, the addition by subtraction, right? So did a management team member that was actually holding the company down leave, and therefore, the stock may actually rise up, which I guess that would be a reason to buy, not to sell. But anyways, way off track here. I apologize for that. You guys know what I'm saying though. In the opposite direction, did a key management team member leave, and therefore there's going to be a problem at that company moving forward? Basically, that person was the driver behind that company in the first place. Fundamental changes happen all the time with companies, and that's a perfect reason to sell that stock, because guess what? It's not the stock you owned whenever you did your due diligence up front in the first place. So you got to be able to recognize that and then be able to assess it. And if after your assessment, after you've looked through all the factors, it may make perfect sense to sell. And third would be tax loss harvesting, which, you got to have gains in order to really take advantage of tax loss harvesting, which I'm not sure too many people have gains this year. Some do, obviously, but not everybody does. But tax loss harvesting, if I could talk. Anyways, it is a viable strategy to sell and then look to maybe buy that stock back later or put the money into something else in the meantime. But it is a strategy that you can implement there. Now, obviously, you need to talk to your CPA, your tax attorney, or whatever the heck you use for taxes. And I'm sorry, guys, I'm US based, so that rule may or may not apply for you if you live overseas and such. I apologize. But you need to get with your tax professional there and really plan this out. It is a strategy that you can use. But again, it's one that you just can't willy-nilly go, I don't really like that stock today. It's down, it's beat down. Let me just sell it and I'll take that money and put it some other place and kind of use it half-heartedly. You really got to look into, what the rules are. Some of you guys are buying in, retirement funds, and some of you guys are buying in personal accounts. Again, like everything else, just plan it out. It is a viable strategy, and you absolutely want to get with your tax professional about how to best implement it and to maximize the benefits that come along with that, at least here in the US, to maximize those benefits. And the fourth and final reason is the price is just low. I mean, that's, what you do. When the price goes down, you sell it, right? All right. I'm totally kidding, guys. I'm totally kidding. Don't take that seriously at all. But I hear a lot of people talking about selling, and that's really the only reason why they can get me to sell is because the price is actually low. I mean, that's it. That's all that it is. And then as I talk to them further, it's basically they're going to sell right now because next year it's going to be even worse. And they just know it's going to be worse. So they're going to sell it now and then buy it cheaper, next year sometime when the economy and everything else gets worse. Which I immediately say, well, didn't you buy it thinking it was going to go up? So your track record honestly isn't very good. If you bought it, thinking it was going to go up and it went down instead, but now you're sure it's going to go down even further because, we're basically at 52-week lows for a lot of these stocks. It could go lower. I agree. Who knows? Nobody knows. But now you're confident in that you're willing to sell and roll the dice to do that the other way. So you're essentially engaging in trading. And honestly, you're poorly trading at that because you're not using anything other than, I just think it's going to get worse to actually base that trade on. Now, that doesn't mean you can't be right, doesn't mean it can't work out for you, but long term, this is a terrible strategy and a terrible habit to get into when you're going to sell a stock. And let me ask you this question right here. Would you be selling if Tesla was at 300 and Palantir was at like 15 bucks or something like that? I mean, you tell me, would you be looking to sell then? My guess is probably not. But because they're both beaten down so low, that's the only reason why you're looking to sell, not based upon anything fundamental or anything going on with the companies or performance with the companies or anything else like that. You're just basically, using price as the reason to buy and sell, which of course we all know that's exactly where you end up in situations over and over and over again, where you're buying high and you're selling low, guys. I'm sorry, I'm not picking on anybody here. I'm not hating. I'm not saying I haven't done it before because I absolutely have. But that's the reality of the situation. You bought that stock thinking it was going to go up, which probably means you bought towards the top or during a hype run or whatever the case is. And now it's beaten down. And now you're kind of thinking, well, I'm going to get out and it's going to go lower. And then I'm going to buy, at that new lower point, which honestly, all these stocks, or a lot of these stocks, at least Palantir and Tesla, are both trading right around 52-week lows. So, that kind of seems like you're kind of following that pattern there. I'm not saying it can't work out for you, but I think that's kind of what you're doing. But that doesn't mean there isn't a case to sell both of these stocks. So let's start with Tesla and talk about the negatives and the reasons to sell Tesla stock. And I hate to bring it up and I don't want to talk about it anymore, but we have to because it's the reality. And we got the Elon Twitter drama that is still playing out, guys. And I know it's not something I want to jump into. I understand the goods and the bads with all that and all those sort of things like that. But the reality is, despite the fact that the market has been beaten down, Tesla has been disproportionately beaten down. And if we want to put all the politics aside and all the other garbage aside, the reality is he has sold billions of dollars worth of shares this quarter in order to fund this venture, and he continues to have to sell in order to continue to fund that venture into the future. So the question becomes, and honestly, it's a fair question, is how much more selling of Tesla stock is he going to have to do in order to fund, Twitter? Because right now it's bleeding money, and there's not really a clear path for them to, at least one that he hasn't shared with everybody else, to actually get themselves to where he doesn't need to sell in order to fund those operations anymore. Basically, the timing of this sell and the market downturn could not have been any worse to accelerate a downturn into Tesla stock. And the question is still lingering, and there's not a good answer for it. How much longer is all this going to continue, to directly affect Tesla, despite all the Elon drama and everything else? Put that aside, just the selling of the stocks and some of the other things in the performance with Tesla that may or may not be affected by all this drama. How much longer is all this going to last, and when will we get answers to those questions? Until we have answers to those questions, that's a big negative on the stock. Now, I have to be honest here. Tesla's demand is probably going to dip some, but it has more so to do with the fact that car companies in general don't do well in recessions. Now, slow down. I know everybody likes to say, hey, Tesla's not a car company, this, that, and the other, and that's cool. I agree with you long term. That's absolutely the vision. But for right now, all those other things are not adding revenue to the bottom line like the car company or like the car business is. So it basically is a car company in terms of the revenue coming in and the profitability and everything else, at least for now. So we have to account for that. And by the way, things like solar and other things like that, I'm sorry, I think those are probably going to do poor during a recession as well. So even if they were carrying more of the revenue and were helping out with the balance sheet more, it's still going to be a problem. And I'm sorry, I don't see too many models out there by too many people where they're estimating the number of solar panels installed next year or stuff like that. Sure, it's a little footnote on there on some of the models, but the vast majority of them are modeling out deliveries and other items like that that involve the cars and the trucks and the semis and all that sort of stuff. Not the other energy business and some of the other side things that are coming. And I think in the future, of course, those are going to add a lot more to the bottom line. But for right now, they're not. So I can't really take those into consideration. And for right now, car companies in general tend to not do well during recessions. Now, do I think Tesla does better than Ford or GM? Of course I do. But that still does not negate the fact that it's not going to be breakneck speed whenever we had, like when, rates were at zero and all that sort of stuff like that. So I have to at least consider that and consider that a viable option of something that is going to happen. Now, how much? I don't think it's falling off a cliff like all the analysts and all the other, ridiculous people out there are saying. Not saying that at all. But in terms of a slowdown to where we may don't hit that 50% growth rate, maybe we hit something lower, that's definitely feasible due to that problem. But the negatives with Palantir are honestly a little bit different than they are with Tesla. Now, I agree they do have a loose cannon for a CEO. He's definitely wild in his own right. I think he's just a different kind of weird than Elon's weird. But, they do have a loose cannon as a CEO, but that's kind of where the similarities kind of end from the stock perspective. From a financial standpoint, unlike Tesla, they still aren't profitable, at least EBITDA profitable. Yes, they have free cash flow, and we'll get to that here when we get to the positives. But for right now, they're still not profitable, and the market is just going to punish anything that's not profitable at this point in time. The market is running to safety, and unfortunately, if you're not profitable, even if a lot of other things look great, the market is just not going to come to you, especially large investors. They're going to flee to stocks like Apple, for example, instead of stocks like Palantir. And let's be honest here, guys, they don't communicate anything well at all. I mean, they do great things and they don't communicate it whatsoever. I mean, they basically pay off all their debt ahead of the interest rate hikes, which is a really smart move from management. And it's basically a footnote at best. It's not something they get out there and they trumpet. This happens all the time with this company, just in terms of what they're doing, what their operations are doing. Even if they're positive, they just do a terrible job of communicating everything all the way around. It makes me wonder when they're sitting in with these meetings sometimes, are they really communicating their value to that customer? I mean, obviously they are because they continue to add contracts, but it just kind of makes you wonder because any communication we hear from the company is very, very poor overall. Not every time. It's gotten a little bit better here, I guess, since that one earnings call where Alex decided to bang the table and I don't know, everybody freaked out about it, whatever. But since then, it's gotten a touch better, but overall, they still do not communicate well at all, and that is a problem for the stock. Sorry, when you're sitting in a room full of Wall Street analysts or a bunch of Wall Street analysts on the phone and you essentially don't dumb it down for them, even though they're smart money, you got to kind of dumb it down for them in order for them to understand what you're doing, or else they just write you off as another company that just, hey, they may or may not make it, whatever, we'll take a flyer and we'll talk about them next time, whenever they eventually decide to tell us what the heck they're doing, or we just see something incredible blow away, mind-blowing on the balance sheet or something like that. Until they see that, there's really not a whole lot those Wall Street guys are going to do, or they're not going to give us a lot of help here as Palantir shareholders. And of course, there is the stock-based compensation that is still happening. That still seems to freak people out a lot, despite the fact that it is going down. But, it is still something that is hanging out there. It's not unusual. Other companies do it. Other companies still do it. But, it's been a driving narrative for Palantir for some time. But that segues perfectly into the positives of Palantir, which would be that stock-based compensation is coming down. Now, I agree, if it doesn't continue to come down every single quarter, we got a problem there. But so far, it has continued to come down, so there's really no reason to not think they're going to continue on that trend of continuing to lower that to a much more reasonable level and much more palatable to shareholders, more importantly. Now, they have no debt, over $2 billion in cash, they have new contracts coming in every single quarter, and they're basically cash flow positive. And let's not get into accounting lesson here, guys. It's incredibly boring. But basically, that's huge coming into this sort of environment. But basically, there's a lot of other unprofitable companies that are also not free cash flow positive as well. So Palantir kind of has one of the two there working for them, whereas opposed to a lot of these non-profitable companies don't have that working for them at all. So that's definitely something that definitely makes them stand out on the positive side. And the bottom line is with Palantir, what they do and what they provide to companies and governments and all of that sort of stuff is going to be normal business practice in 10 years from now, and large, basically, and honestly, probably medium-sized businesses too. It will be the norm. Now, I agree, Palantir isn't going to win all of those businesses, but there's plenty of room for all the different competitors to basically add contracts and add on to all those different companies and to be able to provide for those different companies. And Palantir is in a great spot to be able to take advantage of those. Basically, that market is just so big. There's no way Palantir doesn't land on enough of those contracts to really grow the business over the course of the next 10 years. And who here really thinks the government isn't going to continue to buy stuff from Palantir and continue to grow, basically the government footprint across the world, not just here in the US, but across the world? I think everybody knows that's what's going to happen. And on to the Tesla positives. I think you guys know most of them, right? They have huge margins. They make a lot of cash every single quarter. Nobody, well, almost nobody has executed as well as they do. Basically, Apple is the only other company I can think of that has executed better than Tesla this year, and that's despite all the noise. And we basically had a technical recession and all the other interest rates coming up and everything else going on. And there's Tesla just continuing to stroke along and have record quarter after record quarter, despite China locking down and all the other drama that's come with everything else that's gone on in the world this year. There's Tesla just continuing to, basically execute on a level with the largest company in the world. No real need to discuss their financials. You guys know they're impeccable, especially in the industry that they're in. There's absolutely nobody, even in the ballpark. I mean, you might as well just kind of create them and just kind of create two different types of, quote unquote car companies there, because the balance sheets and the income statements and everything else, basically the financials all together just don't even look the same. So just basically separate those out. Oh yeah, and Tesla is also trading at the cheapest it ever has. I mean, the multiple is just getting ridiculous for this stock. I mean, are they not going to turn a profit this year? And let's just say that they don't do 50% next year. Let's 40%. I don't know. Let's get crazy here and call it 30%, 20%, whatever. How many other companies out there in terms of, large cap stocks, how many of them are expected to grow 20% next year? Honestly, look at smaller caps too. How many of those are expected to grow 20% this year and be profitable at the same exact time and have margins that nobody else can touch? I just can't think of too many other companies, if any companies, if I'm really being honest, now that I'm trying to think about it and I can't think of anyone. Anyways, I can't think of too many people. Maybe you guys can comment down below if you got one. But, I can't think of too many companies that are, would be able to beat that performance next year. But yet here's Tesla trading at its cheapest valuation ever. And also remember, Elon is going to go back to his baby that is Tesla and start driving that ship again full time. And a lot of this stuff that's been going on, that noise is going to die down. So once he's back full time and that narrative's kind of died down and kind of moved on, and everybody's kind of moved on to whatever the heck the next drama thing is that's, inevitably going to happen, that's obviously going to be a huge positive for Tesla. So after looking at all this, my question to you is, why sell? I mean, is it because of the prices? Is it because they're beaten down? Which again, my question to you would be, if Tesla was at 300 and Palantir was at $15 per share, would you be looking to sell then? I mean, my guess is probably not. But basically, you are getting shares at a stupid discount right now on both of these companies, in my opinion, of course. Remember, guys, my mentality is I'm looking at these stocks 3 to 5 years out. And in 3 to 5 years, do I think Tesla's going to be a lot higher than $140 or so? And that Palantir is going to be a lot higher than $6 or so. To me, according to my analysis, my plan, and my due diligence is I'm going to be a very happy shareholder buying right now instead of selling and then trying to time the market or do whatever the heck else everybody else is trying to do. For me, neither one of these stocks has met the criteria to sell, so I'm not going to sell. And if you're afraid to buy the dip because you don't know how to do a valuation or how to create a plan or how to keep your emotions in check, and you want 5 free courses and direct access to me to help and a ton of other resources, make sure you don't miss the Mega Deca Super Sale that's going on right now for the Market Insiders private group that is expiring next weekend. And click this video here for the stocks I'm still buying in this market, and click here for exactly what I'm doing to make huge money in this market. So thanks for watching, and we'll see you in the next one.